Quantum Data Energy has delivered record revenue, strengthens its balance sheet, and advanced 2 new projects towards production, marking a significant year and a year of transformation for the business. Joining me now is Pieter Krugel to discuss these numbers. Revenues increased 121%, Peter. I mean, that's fantastic. £1.6 million. I mean, what have been the main drivers behind this record performance?
Hi, Martin. Thanks for having me. Yes, we are very pleased to have completed our audit and published our annual results. And, as can clearly be seen, we've had a very good financial year. In fact, our best to date. So it creates a very solid foundation for us and gives a very good indication as to what shareholders can expect going forward. Because, I mean, we've taken a step forward now, but this is just the beginning. So as we bring megawatts into production, that revenue number is just going to grow. Our profit is just going to grow. And that's the basis of our entire business model. So looking at the 2025 financial year and the record performance and revenues, that was largely driven by 2 main factors. The first is the successful completion of the comprehensive refurbishment program at our 100% owned 8.1 megawatt Pyebridge flexible generation asset, which was completed toward the end of 2024. And the expectation was very much that Pyebridge is now going to generate record revenues, and that was indeed the case. So that on the one hand, and then on the other hand, there was very strong demand for flexible generation power in the UK, which our core business model is based on.
Interesting you bring up Pybridge there, because I noted they generated 10.8 gigawatt hours and achieved an average price well above the wider market. What makes the asset so effective at capturing higher power prices?
Yes, that's a very good question. And again, that's part of our core business model. So we don't generate 24/7. We only generate when there's an acute power demand, and that's typically in the mornings and in the evenings, the peak periods. And the benefit of that is that we sell at the highest prices for the day. So we capture the highest prices for the day. We don't have to generate 24/7. We don't have that increased OPEX. And as such, we still achieve very high revenues, and our profits are healthy.
Now, there was obviously the statutory loss that increased, but that's largely due to one-off costs. How should investors and shareholders view the underlying financial performance of the business?
Yes, so looking at the asset in production, which is Pyebridge at the moment, and we are planning to get a second and third asset into production this year still. So the portfolio of assets in production is growing. So each asset in production is profitable, right, at a project SPV level, and those profits flow back up to PLC. At the moment, the PLC costs, and as you very rightly say, due to once-off costs, mainly related to fundraisings, and we had a fairly large fundraising in 2025 in particular, which had once-off costs, and not all of it cash costs as well. It's just some of it's accounting entries. That's all at PLC level. But as our project portfolio grow and our assets in production grow, the profits from the projects will exceed the PLC costs, and PLC and the group as a whole will become profitable.
Well, it's interesting you say that, because the Hindlip and Broadsley, they're both under construction at the moment. They're both fully funded. What are those 2 projects going to mean for QDE?
Yes, so the funding model for those projects are in JV with third-party investors, and the main reason for that is to limit dilution for PLC shareholders, right? So PLC did not have to fund the full capex for each of those projects. We retain a significant minority equity interest in each of those projects, and as and when construction is completed and the asset goes in production, QDE will receive its share of the profit from those projects.
While you're on that, then, because you use project level partnership to fund the growth while limiting dilution for shareholders, which is always a great thing to see. But is that the model you intend to replicate across the wider pipeline?
Yes, I think in the short to medium term at least. And again, one of the main reasons for that is limit dilution for PLC shareholders. And as the QDE balance sheet and asset portfolio grows, the idea is to grow our equity stake in the projects as well.
So, I mean, one of the buzzwords going on in the industry at the moment is AI data centers, and you're obviously targeting that fast-growing power requirements of those data centers. How significant could that opportunity become for QDE?
Very significant. So our core business model, which we're still focused on, which is our flexible generation assets, which is in front of the meter, meaning we sell into the national grid. That's still very much part of what we do. But our new strategy is for behind the meter power supply solutions to the likes of data centers. And there's a critical need for reliable power supply for those kinds of projects. And the two reasons are the grid queue. So those projects can't get a grid connection within a reasonable timeline, firstly. And secondly, just wholesale power prices. We can supply power to those projects cheaper than they can get from the grid. And that makes our offering very attractive. So we are very focused on that strategy as well.
So obviously the elephant in the room here, Pieter, is the company's currently suspended. What needs to happen now for this to be lifted?
So the condition of our temporary suspension, as we previously announced, was the publication of our annual audited results. With that being completed and published now, the next step is that we'll apply to the FCA to get that temporary suspension lifted. So that's the next step, and we expect that to take a few days, and the suspension will be lifted, and we'll be back to normal.
Great. Well, I mean, Pieter, thank you for your time this morning. It's good to speak to you. And it is quite exciting to see QD. You're entering the remainder of 2026 now with record operating performance, 2 projects approaching production and potentially a significant opportunity in AI. So it's an exciting time for you and the company.
It is, yes. Thank you, Martin.
Thank you.